Okay, good afternoon. Our next presenting company is Artemis Gold, who is building the Blackwater mine located in northern British Columbia. At the end of 2023, construction was 59% complete, and the first gold pour being targeted by year-end 2024. The company also recently released an expansion study to accelerate and increase throughputs of both phases 2 and 3, which would outline average annual production in excess of 500,000 ounces in the first 10 years of mine life. Presenting on behalf of the company is Chairman and CEO Stephen Dean.
Thanks, Andrew. Terrific to see such a huge crowd here this afternoon. We're almost ready for a beer, I'm sure. Thanks for being here and listening. I need to show you that. Artemis is building one of these rare things, being an asset that produces more than 500,000 ounces a year in a safe jurisdiction. And most of us may not think about this, but there's more or less only a handful of assets in the world that do that. On top of that, we're doing it at a low cash cost for the reasons I'm going to explain in a moment. We're in British Columbia. We've got some wonderful ESG benefits, operationally as well as socially. We're also a little unique in that board of management, ranging from our board down to some of our senior staff members, own about 38% of the company, which means that I don't think we could get better alignment with shareholders. And I think we would all agree that if we are to achieve this goal of increasing interest in the generalist investor sector, that we do need better alignment with our management and board and ownership and our institutional investors in order to sustain the capital that we need to continue to make this a viable sector. We, board of management, have invested in excess of $200 million of our own money alongside everyone else at each step since day one, the first IPO capital raising. Our management team is a group of people that have, between Jeremy Langford, our president and COO, and myself, we've built around 10 gold mines in our careers of similar scale. For those investors who are wondering where to get alpha in their portfolio, apart from buying seniors, I think my advice to people who ask, after 37 years of being in this business, is to follow people who've not just done it once before successfully, but multiple times successfully. And I'm pleased to say that I think Artemis is a group of professionals that have done that and are continuing to do that with Blackwater. And there's a wonderful slide of a number of those people. As you can see, we're also very focused on balancing gender here. We've got almost 45% of our senior management are female, and 50% of our board are female. As I mentioned earlier, we're in temperate British Columbia, central British Columbia, moderate climate. We have a very supportive government. I had the pleasure of introducing Premier Eby, the Premier of British Columbia, to the BC Natural Resources Forum last month in Prince George for the second year in a row, this time with our permits and construction underway. And he made that comment about how important it is to them and his government to ensure that there's transparency and security in investing in British Columbia. The other feature that we have in British Columbia is low-cost renewable energy. Our energy costs are around 6 cents Canadian a kilowatt hour, and that is one of the lowest in the world. There are other parts of the world that have hydroelectric power but the number of them are becoming less and less over the last several years. We're fully permitted to construct, and we have wonderful relationships with our First Nations. We're privileged to work with them, and we're proud to say that 30% of our workforce on the construction side, and we hope to transition that into the operations side, are our Indigenous membership of our partners. The other thing that I'd like to touch on whenever I present on behalf of Artemis is that we try and vigorously defend our track record of doing what we say and doing it when we say it. That's a very long list of things, and it's too much for a slide. I know anyone who's in communications would say that to you, too many things on a slide, but I think it demonstrates the point. I'm not going to go through each of those, but it demonstrates the point that they are things that we set for ourselves and publicly communicated that we were going to do, and we've done them all and done them all when we said we were going to do them. I'm pleased to report that Phase 1 construction is progressing. At the end of December, we were about 59% complete, notwithstanding all sorts of force majeure and other challenges that we had during the summer of 2023, including a wildfire that came through the site. I guess informally we're at about a 5% rate of completion per month. We're at about 70% thereabouts, probably at around the end of this month, February. And we plan to be at around 90% completion at the end of next quarter in June. And we're still scheduling to be on time and on schedule and on budget for a gold pour in H2 of this year. We're fully funded. We continue to guide capital total at 730 to 750 Canadian, 750 million, I should say. Our total capital available for the project for construction and development is about $820 million. We're now into the draw of our project debt, and we've got 2 more draws to go to complete the project. We also have on top of that a series of warrants, about 26.2 million warrants that are well in the money at about $1.08 exercise price against a share price today of I think of about $7. And most of those are owned by insiders and/or institutions that have been supporters of the company since day one. So we expect that $28 million to roll in over the next few months as an additional buffer, and it will also allow us to potentially consider advancing some of the other things that we have on our agenda for development. I've touched on this in my opening remarks. This is a rare beast, 500,000 ounces plus of production over the next 10 years. Lower decile of our AISC at 712 US. And I think the other thing to point out and emphasize here is that this is not from a study from 2018 or 2020 or whatever. This is based on current costs with reagents, cyanide costs, labor costs, steel costs, et cetera, all priced at February 2024 pricing. So these are as current numbers as you can get in terms of OPEX today. And that puts us, as I mentioned, in the lowest decile of the global cost curve. So we're not only a tier 1 asset by virtue of scale, but we're also one of the best of that group in terms of costs and operating cost per ounce. One more point to make here on this slide before I move on, and that is I want to emphasize that the top comment, and not many board and management say this publicly in this sector, and that is we have zero intention of diluting our shareholders with an equity financing in order to accelerate Phase 2 as a result of the expansion study that we released last Wednesday. We strongly believe that it will be funded from cash flow at current gold prices and the current gold price outlook. And if for whatever reason that changes, we will simply defer the acceleration of Phase 2. We will not dilute our shareholders for the sake of speed. This is a quick snapshot of our annual production over the next 17 years. Last couple of years of stockpile processing, but as you can see, we reach well in excess of 500,000 ounces a year under our current proposal. Capital intensity, it's not a well-analyzed statistic and metric. I know Andrew does a good job of that. He's focused on that in a lot of his reporting, but I'd like to see us, in terms of the analyst group that support our business, to focus a bit more on that. And I think you'll see that each phase of our expansion in terms of processing capacity per CapEx dollar spent is one of the lowest. In fact, we think it's the lowest in the sector in terms of all of the projects that are under construction or in commissioning at the moment. There's lots of additional opportunities that this expansion study talked about, whether it be exploration upside, whether it be automation of hauling, electrification of the hauling fleet, alternate methods of waste haulage to take advantage of the low cost of electricity in British Columbia. They're some of the things looking forward beyond the horizon that we will look at over the next year or two. In terms of exploration upside, simply by changing the gold price for optimization of this deposit, and all big deposits have this attribute. We're not saying this one's particularly special amongst large deposits, but simply by changing the optimizer from $1,400 gold import without drilling a single hole, we add that red zone of mineralization, which is in our resource model, and that adds approximately 3.2 million ounces as economic into our pit design at $2,000. And then on top of that, we've got exploration upside that we just haven't looked at yet because, frankly, new ounces out 25 plus years away don't really add to the NPV. We've got to remain focused on building what we have, being phase one. But as you can see from that diagram, the northwest plunges is open and the south is open, and we plan to test that once we get into cash flow over the next several months. I think that's going to wrap it up, Andrew. We may have an opportunity for one or two questions.
We do have one question that's come in on the app, and I think we'll just push the envelope here a little bit. If you could give us a quick answer. It's a fairly straightforward question. Can you explain why you're so confident that the project will be finished on time and on budget?
Well, I can give a glib answer because we've done it before, but that's probably not satisfactory. The other reason is we're about 92% committed on that CapEx spend, guided at 730, 750, so we're about 92% as we stand today on that guided capital, the lower end, and that gives us a lot of confidence by itself. And you know, as you approach, and there are other companies here at this conference who are also approaching commissioning stage, as you approach the finish or the end stage of a CapEx spend, the capacity to blow out is diminishing. So we're not planning to blow out, but you know, the math doesn't allow you to blow out significantly as closer you get to the finish line.
Well, look, I think that's as fair an answer as any. If the person who submitted the question wants a little bit more detail, I'm sure Stephen will take the question out in the hallway so we can move on to the next speaker. Thank you.
Yeah, thanks everybody. Thanks, Andrew.